The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Happy Friday, everyone. TGIF. Welcome to Breakout Investing on TFNN, now 5 days a week on the network from 3 to 4 Eastern. Thanks very much, as always, for tuning in. Talking the market as usual. 877-927-6648. That is the number to use if you want to talk to me. If you can't listen to the show live, no worries. You can always head over to iTunes, pick it up as a podcast, and leave a comment on the show. Give me a review if you don't mind, and don't forget you can listen to all TFNN programming on your smartphone 24/7. Just type in tfnn.mobi in your smartphone browser and you can listen to the stream that way as well. If you want to look at charts that I'm looking at on the program today, you can do that on Tiger TV. That's on the homepage of tfnn.com. The show is carried live on Channel 1 and the show is archived on Channel 13. And Tiger TV is also viewable on your smartphone as well. We're going to start by taking a look at the VIX today. You know, there are just no sellers in this market, and I suppose that's a good thing. Seeing a lot of stocks trading lower today, some trading higher, but breadth still strikes me as a little bit suspect here, but I got to tell you, the major averages are hanging in there just fine. The VIX working on 3 straight declines here. It is down 27 ticks right now to 1501, down about 1.8%, and on pace for its 3rd straight decline near its session low. Let's check in on the NASDAQ Composite. With a little less than 1 hour to go in Friday's session, the NASDAQ Composite holding gains tightly as it's been doing for the past 3 days. It is down just 6 points now, 0.2% to 3,012, holding nicely above that psychological 3,000 level. The S&P 500 also hanging in there, up near its session high right now after hitting an intraday low of 1395. It is now close to 1402. So S&P 500 holding on to that 1400 price level as well. It's down just a point. That's it for the S&P 500. And the Dow, not much selling in that index either. It is down a little more than 1 point to 13,163. So that's where we're at with the market. Yesterday on the New York Stock Exchange, we had volume very light at 571 million shares. It's tracking a little bit lighter than that, pretty close to the 571 million. Like I said, might come in just a little bit lower than that. NASDAQ volume also tracking lighter than Thursday. Yesterday we had volume pretty much average, 1.64 billion shares on the NASDAQ. It's tracking also about 5% lower than that level today. So not much volume in the market. Next week, pretty busy in terms of economic data. We're going to have consumer price index. We're going to have the producer price index. We're going to have retail sales for July, some manufacturing data. So pretty quiet this week in terms of economic data, but pretty busy next week. And then a whole slew of retail earnings reports that we'll go over later in the program. Some more comments from the Fed speak, call it today, in an interview with the San Francisco Chronicle. San Francisco Fed President John Williams said he now supports another round of asset purchases, quantitative easing. Remember earlier this week, Boston Fed President Eric Rosengren also came out in support of QE3. The fact that there aren't any sellers in this market, the fact that indices have been in rally mode, the fact that we are in a confirmed uptrend, the fact that we're really not getting any sell signals in this market is, the market's way of thinking that we're going to get something, either from Mario Draghi and the European Central Bank, from Ben Bernanke and the Federal Open Market Committee, perhaps both entities. But, hey, I just heard David White on TFNN say that he thinks that the Fed may not act until after the election, and I suppose that's a possibility as well. But the market is pricing in some good news here, and bottom line indices are acting just fine. So we'll see how the market trades next week. Taking a look at crude oil today, crude for September delivery gave up 49 cents, 0.5% to 92.87 at the New York Merc. For the week, it rose close to 2%. We'll take a look at the USO here, which we typically do. This is an ETF that basically tracks the price of West Texas light, sweet, intermediate crude oil. It is down 18 cents right now, 34.75, holding gains nicely here. It's trading up near its session high after early weakness. And gold today, December gold, down $2.60, 0.2% to $16.2280 an ounce. For the week, gold rose about 0.8%. At last check, the U.S. dollar index at 82.55, down about 9 ticks. Not much movement in the U.S. dollar. Take a look at the index itself here, the Greenback index. This is as of Thursday's close, and you can see Thursday it closed right at its 50-day moving average here. And again, the dollar index right now is probably just a little bit below that 50-day moving average now at 82.55. So if you've listened to my program long enough, you know I always talk about the 50-day line, the 200-day line. They're support levels during uptrends, and then when downtrends start, they can often become resistance levels. So we'll watch and see if that 50-day line can turn into a resistance level for the U.S. dollar index. And frankly, it could also work that way for bonds as well. Bonds are looking heavy here. This is the TLT, the iShares Barclays 20-year Treasury bond fund. It is below its 50-day moving average after early strength. It's down near its session low, but still up 73 cents to 125.80. Let's check the yield on the 10-year note. That's going to be right around 1.65, the yield on the 10-year note after rising yields for 3 straight sessions. Definitely under some pressure today. The 10-year yield down 2.3%, 39 ticks to 1.65% thereabouts. And the yield on the 30-year bond also lower today, not nearly as much as the 10-year, but at 2.74%. That's the yield on the 30-year note. Let's check in on shares of Yahoo here. New CEO in place at Yahoo, Marissa Mayer, taken from Google. Poor Yahoo, though. Boy, look at this. Just a big gap down, stock down 86 cents today, 5.3% to $15.15. Marissa Mayer can't be happy about this price performance. Company says it's rethinking a plan to return cash to shareholders. This has been the kind of the big question surrounding Yahoo. What is it going to do to enhance shareholder value? And now that Marissa kind of wanting to make her own mark on the company here as new CEO, she's rethinking a plan that would have returned cash to shareholders. Wall Street took that to mean that Yahoo may be interested in pursuing a merger and acquisition strategy. Maybe they're going to pursue growth through acquisitions. That's always a very, very tall order, especially when it comes to a company like Yahoo that's trying to reinvent itself to some extent. So shareholders don't really like the sound of that. That's why the stock is down big today. Let's take a look at Elizabeth Arden, too, ticker RDEN. This is a stock that kind of came out of nowhere in my screens. Elizabeth Arden, of course, fragrance, skincare, cosmetics. Pretty well-run company, though. This is ticker RDEN on the NASDAQ. Stock is following through after a big gap up and strong gain yesterday, up another 1.5% today to 44.68. Earnings up 56% to 28 cents a share. Sales up 15% to 265.5 million. What I like about Elizabeth Arden are basically, consistent annual earnings growth. That's good to see. In fiscal 13, it's currently in fiscal year 2013. Earnings are expected to be up 16%, and then in the next fiscal year 2014, they're expected to accelerate, rising 19%. So growth prospects look pretty good here. Return on equity pretty solid. And let's look at the weekly chart for Elizabeth Arden, and I just like the setup here. It's obviously made a big move this week, but this is a perfect example of a base breakout and a stock that is under meaningful accumulation, not only yesterday but also today. So anytime you see a base breakout like this with the volume, that is a bullish sign, and you can see Elizabeth Arden had been consolidating gains for the better part of this year. It has broken above resistance and good, strong accumulation in this stock. So Elizabeth Arden looking interesting here. Buyers coming back into Research in Motion, slowly but surely. Report out today that IBM might be interested in buying the company's enterprise services unit. Let's see. Boy, yeah, Research in Motion up, what is that, 6 days in a row now? 6 days in a row. It's kind of bumping up against its 50-day moving average here. Stock's up another 5.6% today to $8.23. This is a stock that the traders, option players like to have a lot of fun with here, but again, an example, pretty good bet that this stock, unless if a deal doesn't happen soon, I suspect that this 50-day moving average could be a near-term ceiling for Research in Motion, a company that obviously has lost its way in recent quarters. The BlackBerry 10 has been delayed until next year, early 2013, and certainly the success of the iPhone and the Android operating system from Google has been nothing but bad news from Research in Motion as the company continues to lose market share. All right, let's take a look at Manchester United. We were kind of watching two IPOs that were supposed to price last night. One was delayed, CKE, that's the fast food chain that operates the Carl's Jr. and Hardee's brands. They postponed their offering, but Manchester United, the soccer club in England, they priced at $14. That was below the expected range of $16 to $20 a share. So they priced at 14. Stock is trading pretty much at 14. So kind of a lackluster open for Manchester United, ticker MANU. You can see the earlier today at the New York Stock Exchange, they were giving out all the soccer jerseys and all that, but kind of a lackluster first day of trading for Manchester United. Well, if you thought Monster was on sale yesterday after the stock gapped down on disappointing earnings, boy, has this thing fallen apart in spades. Tom and I talked about Monster Beverage on his show yesterday, one of these big market leaders that had been, showing relative price strength for quite some time, and then in June it started to roll over, broke below its 50-day moving average in July. Stock is down another 12% today to $53.67. Wouldn't touch this one with a 10-foot pole. All good price runs come to an end, and that looks to be the case with Monster Beverage. All right, folks, headed into the first break. Thanks for tuning in. Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Mentioned earlier, crude oil down 49 cents today to 92.87 a barrel. Refiners has been a bright spot in the energy space. Taking a look at shares of Delek U.S. Holdings, this is ticker DK, has been a big winner in recent weeks, but pretty good sell signal in the stock today. It is down 9.9% to 23.48. You can see it's traded 2.2 million shares. This is a stock that normally trades about 325,000 thereabouts. So 2.2 million shares and a 9.9% decline here, coming hard off its high. This is a stock that was very, very extended going into today. So if you've been riding Delek higher in recent weeks, the big percentage decline and the huge volume is an unequivocal sell signal. Let's check in on some other refiners here as well. Western Refining selling not as intense here. Another strong performing oil refiner, down 2.4% to 26.04, trading much more orderly in this name. Refiners, no doubt, have been under a lot of accumulation in recent weeks, but again, DK, pretty significant sell signal there. Not so much in Western Refining. You can see after 6-7 days up in a row in decent volume, kind of coming back here in light volume. Let's also take a look at Tesoro, TSO, another refiner, and you can see it's actually up 8 cents, working on 1, 2, 3, 4, 5, 6, 8 straight gains for Tesoro Petroleum. Very, very extended after a recent breakout over $28 a share. So that is just probably should take this time to remind people you're seeing a lot of extended stocks at this point in the market. So you want to be careful not to chase performance. Probably at a time now where you're going to start seeing a lot of magazines writing about how strong the refiners are, and to me it looks like the trade has been going on for a while. So there's nothing worse being too late to a trade. Names like Tesoro, Western Refining, Delek U.S. Holdings. I mean, the big money has already been made in these names, or at least they're very extended now. So you don't want to chase them. Some other growth names that are too extended to think about buying at this point. Take a look at shares of Cabela's. This is a retailer that operates outdoor equipment stores, CAB, on the New York Stock Exchange. Another stock that is very extended in price here. Don't want to chase it. Had a recent breakout over 41.61. The stock is now at 46.59. So you may get an opportunity to add to this position on a low volume pullback. Maybe take a look at the 10-day moving average, the 20-day moving average. Its 50-day moving average is all the way down at 39.22. So that's a long way. That would be a pretty big pullback. Market probably would have to really fall apart for Cabela to trade down that low. But this is a candidate for likely support at a near-term support level like the 10-day or 20-day moving average. Name that I probably sold, well, not probably, but definitely sold too early. I took profits several weeks ago in Altisource Portfolio Solutions. This is another stock that is very, very extended at this point. You don't want to chase it up here, even though it is holding gains nicely. Altisource recently trading at 83.61, unchanged on the day. Had a nice breakout here over $76 a share, and just no sellers around in this name, and a stock that remains under accumulation. Mellanox, MLNX, another one you want to be careful of not chasing up here. This is a chip designer based in Israel. A lot of people, they don't like to buy stocks when they gap up in price, but you can see when Mellanox gapped up, remember the stock was halted in after hours, and they reported just blowout earnings. Their top line sales growth was up more than 100% from a year ago. I think they did a little over 133 million. Earnings were up 267%. So, just accelerating growth at Mellanox. But big gap up. But if you had bought that gap up at 92, 93, 94 bucks, and here the stock is at 112, still you don't want to. You got profits. You're not getting any sell signals, but you don't want to buy it up here at 112. The stock has been moving for quite some time already. And the same could be said also for Athena Health, ATHN. A lot of strong performing stocks out there that, many will offer additional buy points, but these buy points they usually come on low volume pullbacks to support. Athena is starting to pull back here, volume relatively light, so we'll see what the future holds for Athena Health, but this stock is not buyable right now. It's coming off its high, so we'll be patient here, look for the buying opportunities. Stick with me, folks. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about technical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Tiger Woods making some noise at the PGA Championship at Kiowa Ocean Course in South Carolina. He is 5 under for the tournament, has played 4 holes today in 2 under par. Unbelievably, only had 22 putts in yesterday's round. Gary Woodland has the lead at the PGA at 6 under par. Vijay Singh, good round today, -3. And he is currently at 4 under. Rory McIlroy, Keegan Bradley, also at 4 under. So Tiger Woods making an early move at the PGA Championship today. Back to the markets here. The Dow and S&P 500 are trying to turn green here, and in fact have a little bit. The Dow is up 11 points now to 13,176. S&P 500 up a fraction to 1403. Nasdaq still down just a little bit, 2.5 points to 3,016. The Dow and S&P 500 are working on their fifth straight weekly price gain, so a little winning streak going there. Nasdaq is trying to make it 4 weekly price gains in a row. Talked about the selling in Monster. Again, big gap down for the stock yesterday. Let's go back and take a look at it real quick here. This is another former leader that is, looks like its price run is over, down another 12% today. Remember, Chipotle Mexican Grill made another similar gap down several weeks ago when it reported earnings. Same with Priceline as well. So, lesson here, don't stay married to the former leaders out there, because the institutional selling and names like Priceline, Chipotle, Monster means that as a retail investor, you probably don't want to own these names right now. Some other growth names looking vulnerable out there. We've got GNC Holdings, really showing erratic price action lately. This looks like the chances for more downside certainly outweighs the potential for gains from here. GNC down another 3.4% today to 37.86. Volume very heavy today as it gives up its 50-day moving average. And also Ulta Beauty. This is another well-run retailer out there trying to hold on to its 200-day moving average here, but another former leader that is looking quite vulnerable here. All right, let's head out to Orange County, California. Talk to Garo. Garo, how you doing today?
How are you, sir?
I'm fine, thank you. How's things?
Things are very good. Can't be any better.
Okay.
Regarding Kruger RGR, yesterday I bought it at 5-day simple moving average was $45. I just sold about 30 minutes ago or 20 minutes ago at $47.25. Out of it because the 30 minutes started to curl down.
Okay.
Do you think this is on its way up, or the movie's done, the party's over?
Yeah, man, it's kind of a tough call. I mean, what I don't like about Sturm Ruger is, first of all, I'm kind of seeing not much in the way of accumulation in the stock. In other words, it's been moving higher in recent days, but there hasn't been any juice behind the move. So it looks like it could try to test that swing point just over $50 a share. But until there are meaningful signs of accumulation in this stock, and by accumulation, Garo, I mean, heavy volume gains, signs that big investors are in there buying. I'm just not seeing much of that right now. The swing point is just over $50. It is a base taking shape, but to me, it's not clear to me that this is ready to move higher from here, just due to the lack of volume, lack of conviction behind the buying.
Very good, very good, very good. I'll keep it on my radar list, but I'll see what's going to do on Monday, because I don't keep no stock on Friday at all. On Saturday, Sunday, I'm all in cash. I keep nothing. I don't want a surprise on Monday. So we'll see what's going to happen on Monday.
Sounds like a good strategy. If it takes out, if volume starts to expand and it starts moving higher, then my attitude might turn a little more bullish towards Sturm Ruger. But right now, kind of lukewarm on the stock.
Great. Thank you, sir.
Okay. Have a great weekend, Garo. Thank you.
You too, sir.
Bye-bye.
Bye-bye.
Okay, thanks to Garo. Sturm Ruger, it's a base building stock here. And the other thing I would say about it, and here we can look at it in Tiger TV here, is you have the start of the base that took place in late April. This is when the markets really started to come in. Then you've got the right side of the base that started to form here. As it was working its way higher, really not much in the way of meaningful accumulation. In other words, there were a few volume bars here that where volume came in higher than the prior session, but most of its price gains were in below average volume. So really not much in the way of accumulation. Yeah, we're in the summertime months. And then it started to form this handle area. Now, when a stock drifts low and forms a handle area, you don't want to see heavy volume. And during this period here where it was down 4 days in a row, you actually had volume pretty heavy. So it's a faulty handle. Again, there's a possible breakout taking shape here over just over $50 a share, but this is a faulty base. Can breakouts from faulty bases work? Yes, they can. Fundamentals at Sturm Ruger, the company just reported another quarter of great bottom line and top line growth, but I think that there are probably some concerns here that growth is going to start to slow in coming quarters. So yeah, I just not a big fan of the stock. Right here. That's my general take. So talked about some of these other growth names, definitely vulnerable under pressure here. Monster Beverage, GNC Holdings, Ulta Beauty. There's another one here, a company that used to be known as SXC Health Solutions, a provider of pharmacy benefit management services. They used to be known as SXC Health Solutions. They changed their name to Catamaran, CTRX. But look at this example of potential resistance at the 50-day moving average taking shape here. So you've got a pharmacy benefit management provider like CTRX that's starting to look quite vulnerable here, and then you've got another PBM like ESRX, which recently reported strong earnings and had a nice breakout on Wednesday, good follow-through on Thursday, and coming back in light volume. So CTRX looking very vulnerable here. Express Scripts, a good, solid, heavy volume breakout this week, and stock looks pretty good here. All right, moving on, let's take a look at Fusion.io. Remember when Fusion.io came public, and boy, there was a lot of optimism about this company, and I got to give the company credit. They did have a nice earnings report, and even though earnings were down 40% from a year ago to 9 cents a share, the company did see some nice revenue acceleration in the second quarter. Sales were up 49% to $106.6 million. I think sales this year, the company said, is going to grow better than 40% year over year. Stock has been under a little accumulation going into today, and a big move for Fusion.io, up close to 30% today to $27.25. Tough stock to buy here. Big gap up. Had been technically a very damaged stock, so I'll just kind of watch and see how this one trades for a little while. The company makes storage memory platforms used for data decentralization. Apple and Facebook account for just over 50% of FIO's revenue. So big day for Fusion.io, and this was a stock that had a fairly significant short position, if memory serves. Let me just double check here. Wouldn't be surprised. And yeah, big short position in Fusion.io. So, but stock is still holding on to its gains nicely. Looks like definitely some short covering today, but who knows? Maybe some new money coming into the stock as well. Moving on, taking a look at Nordstrom here. Nordstrom department store, we had good news from Macy's earlier this week. Nordstrom continuing to work on the right side of a big, long base here. Earnings down 12% from a year ago to 75 cents a share. Sales were up 7% to $3 billion. The earnings beat estimates by a penny. Sales mostly in line. Let's take a look at a weekly chart here for Nordstrom. And here it is. And this is just a good example of what a base looks like. Okay, you can see the consolidation that started again back in April. Stock hit a high of 57.75. That was in actually early May, but came down, starting to work its way higher, and you have current resistance at 57.75, and a possible breakout taking shape here. So I mentioned last week, or next week I should say, a lot of retail earnings. If sentiment continues to improve around the retail sector, some of these retail charts, particularly Nordstrom, could yield a breakout. The issue with Nordstrom, though, again, when you're assessing a stock, you've got some distribution in the chart and not a whole lot in the way of accumulation. Okay, last week the stock fell, but it did manage to close up near its high, so that's a support week right there. So overall, not bad for Nordstrom. We'll keep an eye on this one for a possible move higher. The news not so good at Ubiquiti Networks. This is a company that came public in October last year at $15 a share. Was a very, very nice performer in the first quarter, but boy, sellers have been in this stock since May in spades. They make wireless networking products. Earnings were up 50% from a year ago to 30 cents a share. Sales up 40% to $94.9 million. No problem with bottom line and top line growth here. Problem is the company warned that counterfeit products will hurt earnings over the next 2 quarters. That has got to be the strangest excuse for a weak forecast over the next 2 quarters. Companies are copying our products. Well, investors aren't very impressed because the stock is down 42% today to $8.67. So not a good day for Ubiquiti Networks. And then kind of a lesser-known name here, CareFusion, making a big move today. Nice gap up for the stock, up 7.3% to $26.37. CareFusion makes systems that help healthcare providers prevent medication errors in terms of dosage, things like that. Earnings were down 2% to 51 cents a share, but sales up 3% to $968 million. Stock breaks out from deep inside a base over resistance at around 25.75. So a little breakout from, again, deep inside a base here for CareFusion. Just a big mover that figured I would mention here. Another story stock today. I remember when Ron Johnson left Apple, went over to JCPenney to try to turn that ship around. Boy, things have not been good at JCPenney for several quarters now. Stock up 6.4% today to $23.52. The company lost 37 cents a share. Sales were down 23% to just over $3 billion. Same-store sales plunged 21.7% in the quarter. That's after an 18.9% drop in the quarter before. CEO Ron Johnson said, quote, "We have now completed the first 6 months of our transformation, and while business continues to be softer than anticipated, we are confident the transformation of JCPenney is on track." Well, what else is he going to say? Is he going to say, well, everything that I'm doing here is not working? He's got to be confident about what they're trying to do. Big short position in JCPenney ahead of the weaker than expected earnings report today. 56 million shares were held short in this name at the end of July. That was up from 33 million at the end of April. So maybe some people thinking that most of the bad news has been priced in here. That remains to be seen in my opinion, but still stock outperforming today, up 6.4% to $23.52. Here's a name we've been talking about in recent days, Rentech Nitrogen Partners. Boy, Breakout was looking very solid at one point. Now it is trading in the bottom half of its range after hitting an intraday high of 34.48. The stock is now trading around 32.50, up only 6 cents. So buyers were in Rentech Nitrogen at one point today, but has come well off its highs. We had earnings from Rentech, ticker RNF. Earnings were up 218%. to $1.08 a share. Sales were down 5% to $70.6 million, but Rentech's conference call sounded a lot like CF Industries, where they talked about pretty good demand looking forward for the rest of this year and into 2013. Rentech came public in November at $20 a share. They do natural gas-based nitrogen fertilizer and industrial products for the agriculture industry. We had, corn, big drought going on. Corn supplies very, very tight. That should be good news for the fertilizer makers. Farmers are eventually going to, plant more corn, and they're going to need more fertilizer. And that was basically the story that Rentech and CF Industries were talking about. but Rentec again down after early strength. CF Industries kind of strange price action as well. Even when Rentec was trading higher, CF Industries down 2.3% to 207.99. Really having a hard time breaking out here over 208. Always questionable. Stock under accumulation like CF Industries would think it would be able to hold this breakout, but really not making much headway. All right, folks, headed into the final break. Stick with me. We'll be right back. Ken Shreve with you, Breakout Investing on TFNN.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. 5 minutes left to go in Friday's session. The Dow taking the leadership, but baton as we head into the close here. Now up 35 points. Very impressive. The Dow Jones Industrial is now up 0.3% to 13,200, right at its session high. Let's take a look at the S&P 500. We'll see that this benchmark index is also right close to its session high, now up close to 3 points to 1405, and the NASDAQ lagging just a little bit, but still up just a little more than 1 point, trading up near its session high to 3,019. So it looks like we got a pretty good close for the market today. Volume throughout the session has been tracking lighter than what we saw Thursday, about 5% lower on the New York Stock Exchange, maybe 7-8% lower on the NASDAQ. But my bottom line take on this market is, and again, you can see the NASDAQ here just kind of holding on, big gains for the market during these 3 days right here, just moving tight sideways. Very, very strong action. Would still like to see more growth names out there under meaningful accumulation. There have been some, but I'm still seeing a lot of wishy-washy action out there. So still strikes me that there's a lot of money on the sidelines that could be close to coming in here. I think once that process starts to happen, we'll see names like eBay and Amazon and maybe even an Apple, some of these NASDAQ 100 names really start to get going again, because they've been kind of lackluster, but really not doing anything wrong either. So taking a look at eBay, you can see it's just been kind of moving sideways here. No volume at all behind its recent decline, still holding above support. eBay lagging a little bit today, down 26 cents to 44.01. Taking a look at Amazon, same thing. It's been coming down moderately in recent days, but no volume at all, kind of holding on to its big gains after its gap up here in July on strong earnings. It's down $1.32 today to $232.74, and Apple as well holding gains nicely here, not showing anything at all in the way of sell signals, and I wouldn't be surprised to see more upside for Apple here. I think overall the market looks pretty good. No sellers around. Again, next week is going to be very busy in terms of earnings. On Monday, we have Groupon. Groupon is not a relevant stock, but hey, people still like to see what's going on here. Groupon obviously been hit very, very hard in recent months as investors question the company's growth prospects, and rightly so. Stock is having a good day today, though, up 12.3% to $7.47. Has a lot of bad news been priced in here, possibly, but we'll see earnings from Groupon on Monday, and then Tuesday we've got Dick's Sporting Goods, Home Depot, TJX companies, Michael Kors. Wednesday, we've got Deere & Company, Target, Cisco Systems, NetApp, couple of tech names in there. PetSmart also set to report earnings as well. PetSmart still showing relative price strength in this market, holding nicely at its 50-day moving average. Had real strong earnings here. A big gap up for PetSmart back in May when it last reported earnings, and hey, good supporting action at its 50-day moving average. On Thursday, Ross Stores, Walmart, The Gap, and Dollar Tree, DLTR. Let's take a look at Dollar Tree, because these dollar stores are looking quite vulnerable here. Look at Dollar Tree ahead of earnings next week, down 1.8% to 50.71. Resistance at its 50-day moving average, starting to fall below the line here. FDO, another dollar retailer, looking vulnerable as well, also below its 50-day moving average. So the dollar retailers not looking too hot here. Folks, I hope you all have a great weekend. Coming up next, my good friend Tom O'Brien. Tom O'Brien Show from 4 to 6 Eastern. I'll see you back here Monday for another edition of Breakout Investing, now daily 3 to 4 Eastern. Take care.